Hello and welcome to this session. Learning Outcome, LO1, Understand the Functions of Financial Management. Today, we will explore the role of financial management in business success, examining its essential functions and objectives. You'll learn how these practices ensure financial health and support strategic growth. Financial management involves planning, organizing, directing, and controlling financial activities. It ensures efficient use of resources and aligns spending with strategic goals. The scope covers investment, financing, and profit distribution. Control is crucial to monitor and regulate financial activities. These elements support the overarching business strategy. Financial planning forecasts a business's financial needs. It involves estimating capital requirements and deciding on capital structure. Creating budgets and financial strategies is essential. The goal is to ensure the business never runs out of cash. Effective planning supports sustainable growth. Investment decisions determine where to allocate funds for maximum returns. Capital budgeting focuses on long-term investments. Working capital decisions manage short-term assets and liabilities. The objective is to maximize returns while managing risk. This balance is crucial for business success. Financing decisions involve choosing how to raise funds for operations or growth. Options include equity, debt, or a mix of both. Evaluating the cost of capital and associated risks is crucial. The goal is to minimize costs and maintain control. Strategic financing supports business objectives. Dividend decisions determine how much profit to reinvest or distribute. Reinvested earnings fund growth, while dividends reward shareholders. Balancing these aspects is key. The objective is to support future growth while satisfying investors. This balance enhances business stability. Cash flow management oversees daily financial operations. It involves monitoring inflows and outflows to meet obligations. Ensuring liquidity prevents disruptions. The aim is to maintain healthy cash flow. Effective management supports business continuity. Financial control includes budget control and performance analysis. Techniques like ratio and variance analysis are used. Internal audits ensure accountability and prevent fraud. The goal is to track performance and align with strategic objectives. Strong control supports financial integrity. Financial management encompasses planning, organizing, and controlling resources. It ensures efficient use aligned with strategic goals. The scope includes investment, financing, and profit distribution. Control mechanisms monitor and regulate activities. These elements are vital for business strategy. Investment decisions focus on future returns. Non-current assets like property and machinery are key. Control involves techniques like net present value and internal rate of return. Managing working capital ensures liquidity. Effective decisions drive growth and productivity. Raising finance involves equity and debt options. The decision depends on gearing, cost of capital, and risk. Monitoring interest costs and debt covenants is crucial. Finance policies set limits for healthy capital structure. Strategic finance supports business growth. Profit distribution involves reinvestment and shareholder returns. Retained profits fund expansion and manage risk. Dividend policies balance growth funding and shareholder satisfaction. Control ensures decisions align with long-term goals. Strategic distribution supports financial stability. Financial management aims to ensure financial health and growth. Balancing risk, profitability, and liquidity is key. Objectives include securing funds, maximizing returns, and optimizing capital structure. Achieving these supports business sustainability. Effective management builds stakeholder trust. Securing funds involves accessing necessary finance. This includes short-term and long-term needs. Internal and external sources are considered. Cost, availability, and conditions are assessed. Reliable funding prevents cash shortages and supports operations. Meeting shareholder expectations is crucial. Returns can be dividends or increased share value. Financial decisions aim for consistent and competitive returns. Balancing these with financial stability is key. Satisfied shareholders support future funding. Maximizing returns involves balancing risk and reward. Investment decisions consider expected returns and associated risks. Tools like risk assessments and ROI calculations are used. Strategic needs and capacity to absorb losses are assessed. Effective management ensures best returns relative to risk. Capital structure is the mix of equity and debt. A well-managed structure keeps costs low and maintains flexibility. Too much debt increases risk, while too much equity dilutes control. Financial management finds the optimal balance. This supports objectives and enhances investor appeal. Operational functions involve daily financial activities. Treasury management oversees financial assets and liabilities. Estimating capital requirements prevents overborrowing or underfunding. Sourcing finance involves choosing the right funding sources. These functions ensure smooth financial operations. Money management focuses on short-term financial health. It involves managing receivables, payables, and cash reserves. Monitoring inventory levels prevents overstocking or stockouts. Effective management supports daily operations. This prevents cash shortages and ensures business continuity. Financial control tracks and regulates money use. Budgeting and variance analysis compare actuals with forecasts. Setting targets and monitoring compliance is crucial. Internal audits and risk assessments ensure accountability. Strong control supports financial goals and prevents deviations. In conclusion, we have learned that financial management encompasses planning, control, and strategic decision-making. These elements are essential for maintaining financial health and driving business growth. By mastering them, businesses can achieve stability, foster investor confidence, and design more efficient systems to support long-term success. Please don't hesitate to call us on 0748-436-1688 if you have any questions. A member of our team will be pleased to help. Thank you, and see you at the upcoming session.